Well, good afternoon. I am excited to be here with you today, and I'm going to be talking about important considerations when hiring or being hired as a nanny. Now, it's my understanding that most who are attending here are the ones who are looking for the employment as a nanny. So I'm going to focus my presentation on that aspect today. So I want to first talk about wages and the payment schedule. So one of the first things that you need to understand is your schedule for what you're going to be paid. So are you going to be paid on a weekly basis, a bi-weekly basis, or a semi-monthly basis? Now, weekly is obvious, but a lot of people get confused between bi-weekly and semi-monthly. So bi-weekly is every other week, usually paid on Fridays. And the pay schedule generally will run from Sunday of one week to Saturday of the next. And then your pay period is going to fall on that following Friday. If you're semi-monthly, it's twice a month. So your pay period runs from the 1st through the 15th, and then the 16th through the end of month. And you're usually paid about 5 or so days after the pay period ends. Now, this allows for direct deposit in case you want to be paid that method, because you have to have enough time for the payroll to process if you are on a direct deposit schedule. Otherwise, if your employer wants to pay you the same day that the pay period ends, they would have to write you a check, or potentially wire funds to you, which could be quite expensive. And most people probably prefer just writing a hand check. But it's important to understand the difference between these pay periods, because if you are offered an amount and let's say they tell you they're going to pay you so much per paycheck, and if you're using the wrong payroll schedule, you might estimate that you're going to be paid more than you truly are. So for instance, the biweekly schedule has 26 pay periods a year, and the semi-monthly has 24. So make sure that you're aware of your payment schedule and how often you are going to be paid, and then determining what that salary is really going to be. Or if you're an hourly basis, then that one will be a little bit easier to determine if you know exactly how many hours will appear on your paycheck. So the next thing to really understand as well too is if you're going to be on that direct deposit or not. So make sure that you're clear on that, because it does take extra days for direct deposit to process. And another consideration is if you're going to be paid on a salary basis, does that amount count for the total earnings that you should be paid in the event that you are working overtime? So in California, overtime is anything over 8 hours in a day or 40 hours in a week. And let's say you are asked to work a 10-hour shift and you are going to be paid a fixed amount per day. So if you're going to be paid, let's say $200 a day, but they were going to pay minimum wage, which in California for the state is $16 an hour. If you're in the city of LA, unincorporated county of LA, or some other cities maybe that have higher rates, obviously the minimum wage needs to be determined based on that amount. But let's just use the California rate as an example. If you make $16 an hour, if you work your 8 hours at regular pay and then your time and a half for 2 hours, $200 is more than you would earn if you were paid minimum wage. However, if your rate is $20 an hour and you work the 8 hours of regular pay and the 2 hours of overtime, you would be short $20 a day for the overtime. So a lot of times the household employers don't understand how these rules work, but it's important to make sure that you are paid correctly. And if they're unsure when they are quoting an amount to pay you, if you realize that the overtime is going to be included, make sure you have that conversation. Of course, again, if you're paid hourly, it's a little bit easier for them to realize, 8 hours a day at this certain rate, and then overtime is time and a half. But again, you'll want to have that conversation. Make sure that they're completely aware, because unlike people in business who generally know the rules, a lot of times household employers don't know what all of the rules are. And it's not that they want to underpay you, or, they don't know what they're doing, but give them a little bit of grace because they may not know all of the rules. Also, if you work your 7 days in a row, which hopefully you aren't, you're going to have time off, but that also would require overtime, even if you didn't have the 8 hours in a day or the 40 hours in a week. Let's say you were just working 4 hours a day, but you worked the 7 hours or 7 days instead of working like full days, you still technically would be entitled to overtime because of that seventh day in a row. Okay, so now the next thing to think about are tax considerations. So when you are on payroll, you do have your taxes withheld from your paycheck, and that is generally your Social Security, Medicare, depending on how much you earn, federal and state income tax, and in California, also state disability. As the employer, they also have to match Social Security and Medicare for you. And then they also have federal unemployment, state unemployment, and also workers' compensation that they're going to incur. So, a lot of times when people are hired as a nanny, they don't realize all of the extra costs that the employer does have to pay to have them on payroll. So it is more expensive for you to be hired as an employee. But you really should be hired as an employee and not an independent contractor. But I do want to make sure that if for some reason you are not on a payroll and you are an independent contractor, that you are aware that technically a 1099 should be issued to you if you're going to earn more than $600. If you're going to be, a long time nanny, then for sure you're going to hit that amount very early on in your engagement. And if you are not on as an employee and having taxes withheld from your check and remitted to the state and the federal government, then you should be making estimated tax payments. Basically, the government expects that you will be paying your tax as you earn it. Again, on a W-2, it's simple because it's taken care of for you. As an independent contractor, you have to make estimated tax payments. And as an employer, if you are hiring and you have the Schedule H, you don't file that return until your full tax return for the year is filed, but you still may want to make those estimated tax payments so you don't have a large tax balance due and you don't end up with any payment penalties. Okay, let's talk about benefits. What are some of the benefits that you might want to consider having a conversation with your employer to understand if you qualify for these benefits or not? One of the things to consider is, are you going to have paid time off? Now, in the state of California, they do require that sick time be offered, but this is only able to be taken if you are sick or someone that you care for is also ill. But there could be other types of benefits that they offer, potentially vacation pay or at least personal days that you can use if you have something that has come up, you need to be able to have some time off. But again, the sick pay, it's mandatory in the state of California. So again, if you are outside of some of the areas that have additional amounts, the minimum is 40 hours. And this can be granted from your first day of employment, although there is at least a 90-day, waiting period before you would be able to take them, not right away when you first are hired. Or there's an accrual method. So for every 30 hours that you work, you would earn 1 sick hour. They do require that the employer allow you to bank more than you're actually allowed to take. So it can be confusing if you're looking at a pay stub and it says you have sick pay available. But if you've taken some, you may not have as many hours available as is shown. And again, that can become quite confusing, but the state of California does require that you can actually earn more than you're allowed to take in that 1 year period. Other things to consider are the CalSavers program. So right now in 2024, employers are not required to participate yet. But as of 2025, if there is one employee on payroll, then they have to enroll as an employer and report any employee that works for them. Now, you don't have to participate in the CalSavers program if you don't want to. What it is a retirement program, so that if you don't have the option of having any savings any other way through, a spouse's employment, or maybe you do one on your own, that you can participate in the Roth IRA. You would have an amount withheld from your paycheck and have it remitted to the state of California, and you would determine what that rate is. Now, if you don't want to participate, you do have to opt out because the employer is required after 30 days of having submitted your information to the state to start withholding, and it would be at the default rate of 5%. But it is a benefit if you do want to have the opportunity to save for retirement, that it can automatically be deducted and remitted to the state of California for you. Another consideration is there any coverage for medical insurance? Now, often even small employers have a hard time being able to cover medical insurance because it is expensive. Often you can't participate in plans if you don't have enough participation. So the employer may not be able to actually have a policy for you, but perhaps there's a reimbursement that will help you cover some of your costs. It may not be offered, but it is something that you can have a conversation around to see if it is something that you could qualify for. Next, I want to talk about reimbursements. So, if you're an employee, when you drive to and from work, you don't get reimbursed for any type of mileage because it is part of your job to actually get to your job. However, you might be doing some things for the family that are not just you're arriving to and from the job. Maybe you are driving a child to preschool or, elementary school. Maybe you're taking them to some outdoor activities in the park, or maybe, they're participating in soccer or dance. There's some things maybe you're taking them to. You're going to the grocery store or the post office for the family. So anything outside of your normal to and from, the job commute, you should be able to be reimbursed the mileage. Also, if you make any purchases for the family, so perhaps the mom asked you to pick up some dinner for them, or again, maybe they needed a package mailed and you're doing those errands for them, then those should be reimbursed to you for the amount that you have paid. Now, of course, if they know they're going to have that amount that needs to be spent, they could leave you cash or give you, a credit card or debit card or something as well. But if not, you want to make sure that you can get reimbursed for those expenses. So also, what about bonuses or raises? So when you are hired, it's expected when you're in a nanny position that you often will be working for more than 1 year. So if you're going to be working with them long term, when might you be getting a bonus or a raise? Maybe at the holidays, they're going to offer you a bonus, or once you've worked with them for a year, or maybe they just at the beginning of the year will say, for this year, the amount that you're going to earn is, X dollars. But what is that schedule? You want to definitely have a conversation with them to find out what those bonuses and raises might be and when they will occur. Also, how are they going to determine that? Is it just performance based? Is it cost of living? What is it that will make up the factors that help them decide, how much and when those bonuses would be given? Okay, so another thing that we want to consider is an employment contract. You want to make sure you and the employer are on the same page. So have a contract that spells out everything in writing to avoid any misunderstandings. This even includes duties that they would expect you to perform. Perhaps not only are you caring for their children, but they would like you to help with laundry, food preparation, again, grocery shopping, or driving to or from school activities. Anything that the family is going to expect you to do, you want to also be aware of, because the last thing you want is that they have an expectation that these things will be done. You were never made aware of them. And so you're not meeting their expectations. Also, just spelling out the payment terms. Again, are you going to be paid weekly, biweekly, semi-monthly? What is the rate of pay? Again, any, overtime that will apply. Basically, everything that has to do with your position really should be spelled out so everyone knows what to expect. Okay, what about termination? So again, ideally, you are in this position for a long period of time and you expect, to maybe work with that child from the time they're born until they go into school. But things happen in life, right? So maybe something happens with you where you're going to have to move. Maybe there's an illness or you need to care for someone and you're unable to continue. How much time should you give in terms of the notice for them so that they have time to find a replacement. Again, if you're caring for a child and they have to work and you're not giving any notice, that would be difficult for them. On the same side, if you're expecting your employment to, continue long term, but maybe a situation changes with them and they no longer need a nanny, or maybe, they're moving, or, the child is, going to go back to school now. What is the amount of time that they need to give you in terms of having a plan for you to be able to find other employment before you're no longer earning from them? Now, I do have to say, California does not require a set amount of time for notice. So either party can give notice at any time. It's at will employment, but this is just a courtesy so that you can have an agreement that just states, like, ideally, I'll be able to give you this much notice, you'll be able to give me this much notice, and then everyone would be on the same page for that as well. Also, is there any severance pay? So again, if you have come into the family, say, once again, if the child was born and you've been with them until they've gone off to school, and now they don't need you because, the child is going to school until 3 or 4, they've got after school sports and the parent can pick them up. You've been with them for multiple years. Is there going to be severance pay? Now, a lot of times the employers don't even think about this. It's not even something that they maybe even have available to them, maybe in their own employment. So they probably don't think about this, but it is a question that you could ask. Like, if I work for you for a certain period of time, would there be any severance pay when this position ends? And it could be a step up amount. Like, so when you work for so many years, it might be, a certain amount of money. And then based on every additional year, that much more would be added. But what is it that would make up your total termination plans? And again, include that in your contract. Okay, confidentiality, just like you want them to keep your information private, because they would have, especially if you're an employee, they would have your legal name, your social security number. If they're doing direct deposit, they have your bank account, they have your address, all this information that they are going to keep private. And ideally, they're not also talking to others about what you're getting paid and all of the benefits. The same thing for them. They would like to have confidentiality too, so you're not necessarily talking with everyone that who's also in the field, or even if they're not, all of the things about your earnings and benefits. So keep as much information as possible confidential. Once again, too, if you're paid by check, be cautious of that check, because a lot of times there is a lot of theft of identity. So if someone gets that bank information, they could try to create a fake check and be able to take funds from the bank account. So you want to protect all the information of your employer as much as possible as well. Now, I do want to go over the guidelines for the IRS and also the state of California in terms of the employee versus freelance worker. A lot of times people think, well, it's just easier if I am an independent contractor, or the person who's doing the hiring will think it's just easier, right? Rather than setting up an employment account with the state and, all of the things that go along with that, getting workers' compensation, withholding tax, remitting tax. I'm just going to write you a check for the total that you earn, and we'll leave it at that. But the IRS has very specific guidelines about who can be an employee and who should, actually who must be an employee and who can be an independent contractor. So they look at factors such as behavioral control, financial control, and relationship of the parties to determine if it is an independent contractor relationship or not. Now, when you work for a family, they generally have control of when you work, how you work, and what that work really is, which gives proof to an employee-employer relationship. But there also is a guideline that says if you are going to earn in 2024 $2,700 or more, then you should be an employee. So even if we look at the employment regulations regarding behavioral control, financial control, and relationship of the parties, even just disregarding that, if you're going to get $2,700 or more, you should be on as an employee. Now, you may not be aware, but you could potentially trigger an audit for the employer. If you say are no longer working for them, you go to file for unemployment benefits, and the state says, well, we don't show that you were an employee if you were an independent contractor, and you don't get to claim unemployment benefits then because you haven't paid in. The employer hasn't paid in for you for any unemployment. And that could then trigger an audit where they're going to come to the employer and say, someone was filing a claim. We want to see your employment records. And if they determine that you should have been an employee, they will charge them, for back taxes, multiple years in most cases. So ideally, once again, you're just on as an employee. They will pay in the unemployment benefits. And if you do need to claim that at some point, then there's a record that you were an employee. Okay, so another thing to consider is record keeping. So it's really important to keep anything related to your employment. Again, if you're on a W-2 and you're paid as an employee, if you get a 1099, you want to have that for your tax return preparation, as well as in case you are ever audited, just to support the numbers that you have, submitted. But timesheets are also important. So whether you're going to be paid hourly or salary, you should really document the days and the hours that you worked, and you can keep a copy of that. Your employer should definitely have a copy of that. And you also want to make sure that any other supporting information that you have. So once again, perhaps you have receipts that you are needing to be reimbursed from the employer because you made purchases for them. You would want to give them the records so that they have it, once again, in case of an audit. But if you are, again, filing as an independent contractor and you paid this out of pocket, these are deductions that you can take. So you want to keep the receipts as proof of the expenses that you incurred. So if you are ever audited at some point, you have that proof. As estimated tax payments, now I think we briefly talked about that. I'm going to talk a little bit more about the due dates in a minute. But if you make those estimated tax payments, make sure that you save proof because it might have been applied to a wrong period, and you want to make sure that you can show that the money came out of your bank account, you did file on time. Obviously, if you're the employer and you have filed the Schedule H returns, you want to keep those. And if you are an entity and you file the actual payroll reports, so the 941, 940, DE9, or DE9C, obviously you want to save that information as well. Okay, so considerations if you are going to be hired as a freelance worker. Once again, I don't recommend that, but if that is the situation that you find yourself in, there are a few things that you want to pay attention to. Number one, if you are not an employee having payroll taxes withheld from your check, technically you should be making estimated tax payments throughout the year. The IRS again assumes, and the state of California as well, that when you are earning your money, you are remitting tax periodically so that you're paying your tax throughout the year as it's earned and not waiting until your tax return is filed in the next year. Estimated tax payments should be paid each April, June, September, and January. And January is for the prior year. So they're usually due on the 15th of the month, unless that falls on a weekend or a holiday, then it's the next business day. But you want to make sure that you determine what you think your tax estimate is and make that timely. You can mail a check with a voucher, or better yet is even enroll in the electronic federal tax payment system, also known as EFTPS. And then the state of California also has a portal where you can create an account, set up your bank information, and have that debited from your bank account. Also, file a Schedule C. So when you're an independent contractor, of course, you claim your income, but you can write off expenses. So where I said earlier, when you're driving to work as an employee, those miles are not reimbursable. As an independent contractor, any miles that you are driving, you can claim if they are for your quote unquote business purposes. So if you're an independent contractor, technically you're providing a service and this would be your business. So you can claim, the mileage. You can have, again, if you have receipts for purchases that you made, perhaps you bought birthday presents for the kids, or you decided to make, some special snacks for them and you purchased ingredients that you weren't reimbursed. Anything that you incur as a cost that is not reimbursed by the employer can be listed on your Schedule C. Now, again, another thing to consider is if you are not an employee, you're not reported to the state, and you cannot claim unemployment benefits if your employment ends. Even if you're a 1099 and you're not reported on that 1099 form, there's no record of you having worked or earned any income. So although many have wanted to kind of be under the table and collect the cash and not have the taxes that they're owing, that can cause an issue. So for instance, when COVID hit, there were a lot of people who were working in homes that once the family now couldn't go to their job anymore and had to be working from home, that childcare often was not needed, and the nannies lost the opportunity for work. They wanted to apply for the benefits that were offered during this COVID period of time. There was a lot of legislation that offered businesses some help, and also those who were employees who were out of work or independent contractors. But there's no proof that they had earned anything and they lost out on the benefits. Same thing as if you've been with the family, then a child goes back to school and now you don't have a position available to work and you need to search for employment. You could claim unemployment benefits until you find another job if you had been reported as an employee. However, if you're an independent contractor, there is no unemployment available. Also, if you're an independent contractor, you may not have any coverage in the event that something happens where you get injured in the home. When you're an employee, there is workers' compensation, and workers' compensation benefits do cover medical injuries if you're injured at their place of, their home, your place of employment. When you're an independent contractor, they don't have to necessarily have workers' compensation. And oftentimes, homeowners' policies do not cover for things that happen in the home related to business per se. So in this case, again, you're providing a service to them. It's not just a normal, family or friend coming over and having a trip and fall. So you want to be careful and make sure that there is insurance coverage for you in the event, even though it might be slight, that you could be injured. Okay, so let me just summarize for you a couple of things that we went over just to make sure that is completely clear. So number one, technically you should be an employee and the hiring family should be the employer for you. Agree on all aspects of the position and put it in writing to avoid any misunderstandings. File reports if applicable, and make sure you pay your taxes on time, and keep employment records in the event of an audit. Okay, so I do want to ask you to stay in touch if you have any questions. You can go to my website, abnp.com. I do have a blog on there and I do record videos. I have a podcast and I do have written blogs as well. Now, a lot of it is for businesses because generally who I serve in most cases are business owners, but I do have other things too. So for instance, I have a 5-series blog on the behavioral control, financial control, relationship with the parties, like all of those factors, the cost of hiring an employee versus having someone independent contractor. So if you are interested in more information on that, you definitely can search on abnp.com. And again, I'll have all 5 of those blogs there. And there's over time, I have other things that are sometimes a little bit more on the personal side. And you can search that there. Also, LinkedIn, you can connect with me there. You can see linkedin.com and my name, Candy Messer. And also my YouTube channel. Also, you can search Candy Messer or Affordable Bookkeeping and Payroll. You should be able to find those videos. And I have a favor to ask you as well. I would love for you to help me because my podcast, Biz Help for You, is a nominee for a Woman in Podcasting Awards. And winners are selected by listeners and anyone else who wants to support me. And so if you could go to the bit.ly Awards 2024, or if you prefer just to type out the womenpodcasters.com/vote. It will ask for your name and your email just to make sure it's not a robot who is voting. So it will email you a voting link. And when you click on that, you'll see the podcast categories. If you'd click in the business podcast and select Biz Help for You and submit, I would greatly appreciate it. So I hope you found this presentation informative. Again, my main goal here was to really just give you some information to understand like the pay cycles, what you should be paid, when does overtime apply, should you be an employee, what do you need to do to stay in compliance? So I hope you found this helpful, and I would love for you to connect with me again. So again, if you have any other questions around this topic, feel free to reach out.